Based on the historical data and forecast, Bitcoin demonstrates a clear uptrend. The price has been consistently making higher highs and higher lows, supported by the upward movement of the Bollinger Bands. The RSI consistently fluctuates above 67, indicating bullish momentum. The forecast for the next week projects continued upward movement, with prices potentially reaching $114,800. Therefore, I recommend a long-term investment strategy focusing on capitalizing on this upward trend. My strategy involves entering a long position at $110,000 on May 22, 2025. Given the strong uptrend, the initial stop loss will be set at $108,000 to protect against a potential pullback. The first target price is $113,500, aligning with the forecast high for May 26, 2025. If the price reaches $113,500, consider moving the stop loss to the entry price of $110,000 to secure profits and further capitalize on the upward momentum. The final target price is $114,800, based on the forecast for May 28, 2025. This strategy combines trend analysis, technical indicators, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum exhibits an overall upward trend, consistently testing and breaking through the 2670 resistance level. The RSI values have fluctuated between 67 and 85, indicating periods of both overbought and oversold conditions. The Bollinger Bands have widened, suggesting increased volatility. Considering these factors, I propose a long-term investment strategy with a focus on capitalizing on the upward momentum. My strategy involves entering a long position at $2,690. Given the recent upward trend and the forecast price, this entry point aligns well with the potential for further gains. To mitigate risk, I will set a stop loss at $2,540, just below the recent support level. The initial target price will be $2,830, corresponding to the forecast price for May 28, 2025. If the price continues to rise, I will adjust the target price to $2,970, the highest point of the Bollinger Bands. This combined strategy leverages the upward trend, RSI signals, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, XRP shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates around the 50 to 70 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will implement a strategy with an entry price of $2.44, a stop loss price of $2.3, and a target price of $2.55. This strategy involves entering a long position when the price touches the lower band of the Bollinger Bands, confirming a potential bounce. To refine the strategy, we will incorporate the RSI indicator. If the RSI falls below 30, signaling an oversold condition, we will enter a long position at $2.45. The stop loss will be set at $2.3 to protect against potential downside risks, and the target price will be $2.55 for a profit of 10 cents. If the price breaks above the upper Bollinger Band, indicating a potential breakout, we will enter a long position at $2.48, with a stop loss at $2.45 and a target price of $2.55. This combined approach aims to capitalize on both volatility and momentum, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, BNB shows a clear upward trend. The price has consistently tested the support level of $667 without breaking it, and the forecast predicts further increases, potentially reaching $712 by May 28, 2025. The RSI has fluctuated between 55.9 and 74.2, indicating periods of both oversold and overbought conditions. Considering the Bollinger Bands, the price is currently approaching the upper band, suggesting a potential pullback. Therefore, I recommend a long position strategy with an entry price of $673. To mitigate risk, set a stop loss at $667, just below the established support level. A conservative target price would be $684, aligning with the first day of the forecast. To maximize potential returns, I suggest a secondary strategy based on RSI and Bollinger Bands. When the RSI dips below 30, consider a long position with an entry price of $628. Place a stop loss at $612, below the lower Bollinger Band. Set a target price of $646. Combining these strategies, the portfolio will benefit from both the overall upward trend and potential short-term pullbacks. This combined approach offers a balance between capturing the upward momentum and protecting against downside risk, aiming for high returns while managing volatility. Based on the historical data and forecast, Solana demonstrates a generally upward trend, fluctuating between a support price of $165 and a resistance of $183. The RSI consistently hovers around the 60 to 80 range, indicating periods of overbought and oversold conditions. Considering the forecast for the next week predicts prices ranging from $177 to $182, and the Bollinger Bands showing a widening trend, I propose a combined strategy leveraging all three indicators. We will initiate a long position when the RSI dips below 60, signaling an oversold condition, and the price touches the support level of $165. The entry price will be $165. To manage risk, the stop loss will be set slightly below the support at $164. The initial target price will be the recent resistance level of $183. To maximize potential returns, we will implement a dynamic target price strategy based on the Bollinger Bands. Once the price reaches $183, we will move the stop loss to the center of the Bollinger Bands, currently around $164. If the price continues to rise and touches the upper Bollinger Band, we will take partial profits and adjust the stop loss accordingly. Specifically, we will take 50% of the position at $183, with an adjusted stop loss of $176. For the remaining 50%, we will target $185, with a stop loss of $179. This combined approach, using RSI for entry, support for confirmation, and Bollinger Bands for dynamic target adjustments, aims to capture significant gains while mitigating potential losses in the volatile cryptocurrency market. Based on the historical data and forecast, Dogecoin shows an upward trend. The price has been fluctuating between a support of $0.215 and a resistance of $0.251. The RSI has been mostly above 50, indicating bullish momentum, with peaks above 80 suggesting overbought conditions. The Bollinger Bands are widening, suggesting increasing volatility and potential for price movement. The forecast for the next week predicts a continued upward trajectory, with prices reaching $0.256. Therefore, I recommend a long position strategy. The entry price will be $0.239, coinciding with the first day of the forecast. The stop loss will be set at $0.215, just below the support level, to limit potential losses. The initial target price will be $0.251, the resistance level. If the price reaches the target, we will move the stop loss to the entry price of $0.239 to secure profits. A secondary target price of $0.256, based on the forecast, will be considered for further gains. This strategy combines trend analysis, support and resistance levels, and RSI and Bollinger Band signals to maximize potential returns while managing risk. Based on the historical data and forecast, Cardano shows a slight upward trend with periods of consolidation. The RSI consistently stays above 50, indicating bullish momentum, but occasionally dips below 60, suggesting potential short-term pullbacks. The Bollinger Bands have been widening, indicating increased volatility. Considering the support price of $0.745 and the resistance price of $0.841, I recommend a combined strategy. Firstly, initiate a long position at $0.792 when the forecast begins. Set a stop-loss order at $0.745, just below the support level, to limit potential losses. Aim for a target price of $0.82, aligning with the forecast and just below the recent resistance. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI falls below 50, consider a temporary hold or even a short position, anticipating a bounce from the oversold territory. However, given the overall bullish trend, prioritize the long position. If the price touches the lower Bollinger Band, it suggests a potential buying opportunity. Therefore, if the price drops to $0.75, enter a long position with a stop loss at $0.743 and a target price of $0.801. This layered approach, combining forecast data, support/resistance, and technical indicators, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, TRON demonstrates a slightly upward trend with price fluctuations within the range of $0.266 to $0.272. The RSI fluctuates between 60 and 72, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a slight pullback. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. My proposed strategy is to initiate a long position at $0.271. Given the recent price action and the proximity to the resistance level, I will set a stop loss at $0.266, just below the support level, to limit potential losses. The initial target price will be $0.278, aiming to capture a small profit while respecting the resistance. If the price breaks above $0.278, I will adjust the target price to $0.283. This strategy combines trend following, support and resistance levels, and risk management to maximize potential returns while minimizing risk. Based on the historical data and forecast, SUI exhibits an overall upward trend, consistently bouncing off the support price of $3.8. The RSI values have fluctuated between 60 and 76, indicating periods of both oversold and overbought conditions. The forecast prices for the next week predict a continued upward trajectory, with prices ranging from $4.17 to $4.25. Considering these factors, I recommend a long position strategy. We will utilize a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. The entry price will be $4.17, triggered when the forecast price hits this level. The stop loss will be set just below the support price at $3.77 to mitigate potential losses if the price reverses. The initial target price will be $4.25, aligning with the forecast high for the week. If the price reaches $4.25, we will move the stop loss to the break-even point of $4.17. A secondary target price of $4.33 will be set if the price shows strong momentum, based on the upper Bollinger Band. This combined strategy aims to maximize returns while minimizing risk by leveraging multiple technical indicators and price action analysis. Based on the historical data and forecast, Chainlink demonstrates a generally upward trend, bouncing between the support price of $16 and the resistance of $17.4. The RSI fluctuates, dipping below 50 and reaching above 65, indicating periods of both oversold and overbought conditions. The Bollinger Bands show price volatility, with the recent price nearing the upper band, suggesting potential for a pullback. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels for optimal returns. My recommended strategy involves a long position entry at $15.3, coinciding with a relatively oversold RSI reading of 50.7 and the price near the lower Bollinger Band. A stop-loss order should be placed at $15, just below the lower Bollinger Band, to limit potential losses. The initial target price is set at $17, aligning with the forecast price and the previous resistance level. If the price breaks through $17 and continues to rise, a second target price can be set at $17.4, the previous resistance level. This strategy combines technical indicators with support and resistance levels to maximize profit potential while minimizing risk. Based on the historical data and forecast, STAX shows a fluctuating trend with recent support around $0.85 and resistance around $1.04. The RSI indicates periods of overbought and oversold conditions, with recent values above 50, suggesting a bullish momentum. The Bollinger Bands suggest that the price is currently near the upper band, indicating a potential for a pullback. Considering these factors, I propose a strategy combining RSI and Bollinger Bands. I recommend entering a long position at $0.984, anticipating a potential upward movement based on the recent bullish trend and forecast. A stop loss should be placed at $0.88, slightly below the recent low and the lower Bollinger Band, to limit potential losses. The target price is set at $1.04, aligning with the resistance level and a reasonable profit target. To refine the strategy, I will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, I will enter a long position at $0.85, with a stop loss at $0.80 and a target price of $1.04. Conversely, if the RSI exceeds 70, indicating an overbought condition, I will consider a short position at $1.04, with a stop loss at $1.07 and a target price of $0.98. This combined strategy leverages both Bollinger Bands and RSI to maximize profit potential while managing risk effectively. The most efficient portfolio will involve 60% of the combined strategy and 40% of the long position strategy. Based on the historical data and forecast, Mantra shows a downtrend with significant volatility. The RSI consistently remains below 20, indicating an oversold condition, suggesting a potential for a bounce. However, the forecast price continues to decline, reaching as low as $0.264. Considering the support price of $0.375 and the forecast, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $0.264, placing a stop-loss order at $0.25 to limit potential losses. The target price will be set at $0.3, aiming to capitalize on a potential short-term rebound. To refine this strategy, we will incorporate Bollinger Bands. The price consistently trading near the lower band further supports the oversold condition. If the price touches the lower band and the RSI confirms the oversold level, it strengthens the buy signal. If the price breaks below the lower Bollinger Band, it signals a potential continuation of the downtrend, triggering the stop loss. Therefore, the portfolio combines the RSI and Bollinger Band strategies for enhanced efficiency, with the final entry price at $0.264, stop loss at $0.25, and target price at $0.3. Based on the historical data and forecast, Worldcoin exhibits an overall upward trend, consistently testing the resistance level of $1.3. The RSI values fluctuate but generally remain above 50, suggesting bullish momentum. The Bollinger Bands indicate periods of volatility, with prices occasionally touching the lower band, but subsequently rebounding. The forecast for the next week projects a continued upward trajectory, with prices expected to reach $1.32. Therefore, my recommended strategy is to implement a long position, capitalizing on this prevailing bullish sentiment. Specifically, I suggest entering a long position at $1.23, coinciding with the initial forecast price and a slight pullback from the recent resistance. The stop loss should be set at $1.15, aligning with the established support level, to mitigate potential losses. The primary target price is $1.3, representing the immediate resistance level. However, given the bullish forecast, a secondary target of $1.32 should be considered for maximizing profits. This strategy combines technical indicators and price action analysis to identify high-probability trading opportunities, aiming for substantial returns while managing risk effectively. Based on the historical data and forecast, Artificial Superintelligence Alliance demonstrates a fluctuating trend with recent support around $0.782 and resistance near $0.908. The RSI values hover between 50 and 75, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility. Considering this, I recommend a moderately bullish strategy. We will initiate a long position when the price touches the support level of $0.782. The stop loss will be set at $0.763, just below the recent low, to protect against potential downside risks. The initial target price will be $0.857, aligning with the forecast price and the upper Bollinger Band. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we will enter a long position at $0.782 with a stop loss at $0.763 and a target price of $0.878. Conversely, if the price touches the upper Bollinger Band and the RSI exceeds 80, indicating an overbought condition, we will close the existing long position or avoid entering a new one. This combined approach, leveraging support, resistance, RSI, and Bollinger Bands, aims to maximize returns while managing risk effectively. The final portfolio will prioritize the moderately bullish strategy with RSI and Bollinger Band signals for enhanced precision. Based on the historical data and forecast, Eigenlayer shows an overall upward trend, consistently bouncing off the support price of $1.33. The RSI values fluctuate, but generally remain above 50, indicating a bullish sentiment. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Given the forecast prices, which predict a continued rise to $1.74, I recommend a long position strategy. We will use a combined approach incorporating RSI and Bollinger Bands to maximize potential returns. My strategy involves entering a long position at $1.55 on May 22, 2025. The initial stop loss will be set at $1.36, just below the recent support and the lower Bollinger Band to mitigate potential losses. The first target price will be $1.66, aligning with the forecast for May 26, 2025, and the upper Bollinger Band. If the price reaches $1.66, we will adjust the stop loss to $1.50 to protect profits. The ultimate target price is $1.74, the highest forecast price for May 28, 2025. This strategy leverages the predicted upward trend while incorporating risk management techniques through stop loss adjustments. Based on the historical data and forecast, Bittensor exhibits a clear upward trend. The price has been fluctuating within a range bounded by a support level of $344 and a resistance level of $464. The RSI indicator shows values mostly above 60, indicating bullish momentum, with recent values hovering around 60 to 70, suggesting the asset is approaching overbought conditions. The Bollinger Bands have been expanding, indicating increasing volatility, and the price is currently near the upper band, further reinforcing the bullish outlook. My strategy will be a combination of RSI and Bollinger Bands. Given the current conditions, I recommend a long position. Entry price will be $460, coinciding with the first forecast price and the upper Bollinger Band. The stop loss will be set at $436, just below the recent low and above the center of the Bollinger Bands, to protect against a potential pullback. The target price will be $477, aligning with the final forecast price and the upper Bollinger Band, aiming to capture the anticipated upward movement. This strategy combines the bullish signals from the RSI, Bollinger Bands, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, THORChain shows a generally upward trend with periods of consolidation. The RSI consistently fluctuates, reaching overbought levels above 80 and oversold levels below 20. Considering the recent RSI values hovering around 60 to 70, the asset is neither significantly overbought nor oversold. The Bollinger Bands indicate periods of volatility, with the price occasionally touching or crossing the upper and lower bands. The forecast suggests a continued upward trajectory, with prices expected to reach $2.18. Therefore, a long position strategy is recommended, aiming to capitalize on the predicted price increase. We will initiate a long position at $1.97. The stop loss will be set at $1.89, just below the recent support level and the lower Bollinger Band to mitigate potential losses. The initial target price will be $2.11, aligning with the first forecast price and a reasonable profit margin. If the price reaches $2.11, we will consider a partial profit-taking strategy and adjust the stop loss to $1.9 to protect the gains. The final target price will be $2.18, corresponding to the highest forecast price. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize profit potential while managing risk effectively. Based on the historical data and forecast, KAITO exhibits a clear upward trend, particularly noticeable from May 22 onward with consistently increasing forecast prices. The RSI values hover around 60 to 70, indicating neither extreme overbought nor oversold conditions recently. However, the forecast suggests a strong bullish momentum. I propose a strategy focused on capitalizing on this anticipated upward movement. We will initiate a long position at $2.15, coinciding with the first forecast price. A stop loss will be placed at $2.05 to mitigate potential losses if the price reverses unexpectedly. The initial target price is set at $2.47, aligning with the forecast price on May 27. To enhance the strategy, we'll incorporate Bollinger Bands. The price consistently trading above the upper band signals a strong bullish trend. If the price reaches $2.47, we will move the stop loss to break even, protecting the initial investment. Further, if the price continues to rise, we will set a second target price at $2.62, corresponding to the final forecast price. This layered approach allows us to capture significant profits while managing risk effectively. The portfolio combines the RSI and Bollinger Band signals to maximize efficiency and potential returns. Based on the historical data and forecast, Pudgy Penguins shows a slight upward trend, bouncing between support and resistance levels. The RSI is currently above 50, indicating bullish momentum, but approaching overbought territory. The Bollinger Bands suggest that the price is currently near the upper band, hinting at a potential pullback. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position at $0.0149. To manage risk, set a stop loss at $0.0126, just below the lower Bollinger Band and recent support levels. The initial target price will be $0.0159, aligning with the recent resistance and the upper Bollinger Band. To refine the strategy, we'll incorporate a dynamic target based on the RSI. If the RSI reaches 80, consider taking partial profits at $0.0155 and moving the stop loss to break even. This allows us to capitalize on the upward momentum while protecting profits. If the price reaches the initial target of $0.0159, we can either hold for a potential breakout or take full profits. This combined approach leverages both Bollinger Bands and RSI to maximize potential returns while mitigating risk, creating a robust and adaptive investment strategy for Pudgy Penguins. Based on the historical data and forecast, Dogwifhat demonstrates a clear upward trend with recent volatility. The RSI consistently fluctuates above 60, indicating bullish momentum, and has breached the overbought level of 80 several times. The Bollinger Bands have been widening, suggesting increased price volatility and potential for further movement. Considering the forecast prices, which consistently predict increases, and the support price of $0.931, a long position strategy is recommended. Specifically, we will enter a long position at $1.1, coinciding with the first forecast price. The stop loss will be set slightly below the support level at $0.95 to mitigate potential losses if the trend reverses. The initial target price will be $1.27, aligning with the highest forecast price, offering a substantial profit potential. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, oversold, during the forecast period, we will hold the position, anticipating a bounce back. Conversely, if the price touches the bottom of the Bollinger Bands, we will consider tightening the stop loss to $1.12. If the price reaches the top of the Bollinger Bands, we will move the target price to $1.32. This dynamic adjustment based on technical indicators aims to maximize profits while managing risk effectively. Therefore, the final portfolio will be a long position with an entry price of $1.1, a stop loss of $0.95, and an initial target price of $1.27, with adjustments based on RSI and Bollinger Band signals.